All I need you to do is let me know where you're coming from, and let me know if you can hear my audio and the video looks good on your end, because for some reason I use our system called Restream. Sometimes I get the chats and sometimes I don't. So I'm trying my best here to do this. So without further ado, I need you guys' participation. The reason why I do live events is, I'll just advise you guys, is because I want this to be participation. I do a video every morning, kind of giving you an update of where the markets are going. But basically, what I'm trying to have you do is ask me questions, those that maybe your parents don't know, those that your school teacher doesn't know, those that you just don't know about. Or you might be in the mortgage business and you're like, hey, can I do this? I don't know about that program. If you're a realtor, this is a great opportunity for realtors to learn the mortgage business. And in today's video, what we want to show you is basically just a little quick peek at what we're going to be covering on our live event this evening, because there's a fantastic program for people out there in California. So we talked to a lot of people in California that are looking to purchase their first house. And it is crazy. There's a lot of millennials out there make good money, have good credit. They just can't afford a house. They don't have the down payment, or they don't have this. I'm going to show you a fantastic tool that we have, or program that we have, which is going to give you 20% for your down payment. Yes, 20%. So think if you're buying a $700,000 house, you're going to get $140,000 as grant money that you're going to use to buy that house. Okay, and I'm going to explain that and more here in a minute. So let's get over first thing, and let's look at what the markets are doing. So we go into the markets, and here we are. I love when this stuff's flat. Look at it. The 10-year Treasury, nothing. The MBS markets, nothing. Whew, I can sit back and say, thank goodness, because it's hard to manipulate or maneuver through systems that are just bouncing all over the place. Some economic news that came in that's a little concerning today is right here. You're starting to see, well, you're not starting to see, pending home sales are coming down, and the Federal Reserve are working hard to do this. But look at where the analysts are on some of these things. So this is what I want to show you guys, because if you just watch mainstream media, hey Ozzy, thanks for joining us out in Cali, buddy. Let's just take the news that came in today. Okay, Wednesday. The previous reading on pending home sales was up 8.1%. Okay, the forecasts were negative 2.3. So let's say these guys are as bad as weathermen. It came in at 0.8 positive. Okay, now look at this other one. Here's oil inventories. Okay, there was 1.17, I think that's billion barrels of oil, because we go through hundreds of thousands of barrels a day. The analysts were expecting basically it's flat. Okay, so it's flat. That's what this is telling us. It came in at 7.489 billion barrels short. How do you miss it that far? It's like you coming out, the weatherman coming out and saying, okay, guys, it's going to be sunny and 80 today, and we get a blizzard. I mean, that's how far off these numbers are. It's interesting to see what's going to come in tomorrow when we have GDP. The Federal Reserve's watching this. Everybody's watching this, because the definition, or the old definition of the recession was 2 negative quarters of GDP. Well, so that's where we're going to watch this. But that was the old definition. And then initial jobless claims are coming in tomorrow, and so forth. So let's get over the headline news. Please, guys, as you're coming in, I see you coming in because I can see counts. Please let me know where you're coming from, what you do for a living. Ozzy, what do you do for a living, bud? And then what I want to do is ask any questions. I don't care if it's about stocks, bonds, cryptocurrencies, real estate, because we call this episode Scrub, because we cover all those things. And this evening, if you would join us, because we have a fantastic show tonight. Me and Kyle from Win the House You Love, we're going over a program for you guys out in California to help you get into housing. Okay, but let's go through the headline news right now, and then Ozzy, owner, awesome. Ozzy, stay tuned, because I'm going to have some great information for those out in Cali. So if you guys are coming on board, you're from Cali, let me know, because this is for you guys. But right now, let's talk about the markets, what they're doing. Look at this. Look at the markets. There's no news out today, guys. There's nothing. No banks failed. Well, we got problems in the cryptocurrency space, but those are even rallying. Look here. The Dow Jones is up 301. S&P 500 up 56, NASDAQ up 200, Russell 2000 up 18 points. Crude oil's down, but we're going to see the oil prices go up. Ozzy, are you an owner-operator of a truck or something? Or are you owner-operator of a mortgage business? Love to know that. You're the only one corresponding with me, so we'll just have a conversation, me and you. And I'm fine with that. Congress grills regulators on SVB Bank, but can't agree on fixes. They can't agree on anything. Just think about it. What they don't, what they can't agree on, basically, what the weather is today is similar to what I just spoke about. It's like watching Fox News and CNN. It's the same story, but completely different backgrounds. So this is trucking. God bless you, man. So you're in trucking. So I don't know if you're sitting at home or you're driving right now watching me, but be careful of the road, bud. Okay, so if you're looking at the federal government to get basically agree on anything, they're not going to. So when you see headlines like this, they can't agree to the fixes because if one side says this, obviously the other side have to oppose it because they hate each other. Basically, that's what it is. How UBS. So let's just go through the headlines. Former Starbucks things, more regulation, more and more and more regulation. How about we just have the regulations that we have? Maybe we just put them in place and regulate them. There's an idea, because if you go back into a lot of the details on these banks crashing, right now we saw Credit Suisse. Now there's a whistleblower that came out and they said, well, just give you some headway on Credit Suisse. They were fined hey, Jackie, how you doing? Credit Suisse was fined $2.9 billion in penalties a few years ago for just bad stuff. And now we wonder, why this is happening. Well, now the research has, and we're finding whistleblowers coming out that there's 25 U.S. families, very wealthy families. We're probably not going to find out who it is, and there's nothing going to happen to them. But there's 25 families that are basically putting their money into these foreign banks, Credit Suisse. And this whistleblower from Credit Suisse says, yes, there's 25 prevalent families that are laundering. I won't say laundering. They're hiding a ton of their assets in Credit Suisse, avoiding taxes. That's called tax evasion. And Capone was put in prison for tax evasion. So what will happen to these people? Who knows? Probably nothing, because they're politically tied. If you really get into those details, either somebody's probably going to not wake up the next morning, or just something's going to happen. Look at the Epstein thing. It was huge news at one point, and then all these people came out of the woodworks who actually had correspondence with him and visited his island. Then all of a sudden he ended up dead, suicide. And then then basically thing got washed under the rug. You never heard of it. It was child molesting. They were raping, teenage girls, but that's not why we're here. Let's get over to this. I'm not trying to make this doom and gloom. Okay, so let's go to the next thing. Stock reports. So you have here, the stock market should be closed as of now. So the stocks ended up 300 points, S&P up. Everything was up at about 1% or right around 1%. We love those. Stock closed higher on Wednesday as tech names like lead the turnaround. Just last week, tech was the no-no. Okay, but one other thing I want to show you guys is what's going on with cryptocurrencies. Let me see if I can find it here. This is wild. Okay, so I own shares of Bitcoin and Ethereum. Okay, but here's the top cryptocurrencies that are out there. Look at this. It's up $1,000 just today. So you guys might say, Dan, you told us to avoid this in the short term. Yes, because if you look at the volatility of this, let me see if I can pull up this chart. This will give you sleepless nights. And if you if you are in the real estate business, you already have sleepless nights. Jackie can probably attest to that thing. But let's just go back to a year. Here's Bitcoin over a year. Now, you tell me if this is stability in any market. Okay, are you wanting to invest in this stock? If you go back even farther, well, if you go back way back here, you'd make a killing. But here's this stock. Okay, it's nuts. It's nothing that I would be putting in new positions on at this time. But you guys do what you want, because I'm not a professional trader. I don't give this advice for you guys to trade. Please don't trade off of what I have, because I just do this for educational and entertainment purposes only. So the next tab is my Google search. Fantastic. Whoa, we have Kyle on here. Hey, buddy, you're saying, yo. I don't have my light on behind me because it glares out my screen. But Kyle, I got to give him kudos to this one. Look at what Kyle just created. Okay, this is what we're going to go over in detail this evening with our home buyers, because we do a home buyer basically live event every Wednesday night. From 7 o'clock Central Time to kind of whenever we get off of there. And I try to ask Kyle, can we just do an hour? Because by that time of night, I'm pretty tired. But we have a fantastic program coming available. And Jackie, you might want to know this, because if you have any buyers that are looking to move to California, this program, I would personally take this deal. Okay, so here's what it does. And then guys, please ask the questions as you come in. And I don't care. My 3 o'clock lives, I call it scrub. And what I mean by that, I talk about stocks, crypto, real estate and bonds. I don't know just real estate. I have an economics degree, and I've been trading my own stuff for the last 30 years. Does that make me a prudent investor? No, but at least you can learn from my mistakes. How about that? Okay, so what we have right now is California Dream for All is a down payment assistance program that the California came out with, and it just launched yesterday. So we have the availability to get into this program on Monday. We're launching this right now. So if you need consultations on this, you're in California and you really want to know what's going on with this program, please schedule a consultation down below. We're going to talk to you as much as we know about it at this time, get you prepped for it, and just to make sure you qualify. So when our lender does open up for this program, we're fully in it. And I already have people backlogged to go over this program. So Kyle does a fantastic video like he usually does right here, and he goes into it in depth. But he created this website. So let's go through it. You go down through here, and basically here's what this program consists of. Based on your income, based on it versus the average median income in your area in California, I'm going to show you here in a second that Kyle already has all this built in. What this program will do is it'll give you 20% of the down payment to use as a down payment. So think, you get 20% down. It could be hundreds of thousands of dollars, okay? You get 20% down. You don't need to make any payments on that. So they're giving you your down payment, your whole down payment. You avoid PMI because you're getting 20% down. That's going to save most people $300, $400, $500, $600 a month because now they can put down a full 20% and not have to pay PMI, okay? So it all depends on your income. Okay, so let me just break this down in its simplest terms. Try this out because we're going to be launching this. I think Kyle does have this available now, but check us out tonight. We'll give you all the links and everything to it. So what you're going to do is go down through here, and it's going to explain to you what's happening. So all I need to do, if you're in California, check this out. Go in here, and are you a first-time home buyer? What a first-time home buyer is when it comes to this program and mostly other first-time home buying programs is it could be your first house, truly your first house, or you are not vested in title to a property over the past 3 years. So if you were divorced and you've been divorced for 5 years, but your spouse didn't take you off of that loan until 2 years ago, you don't qualify. So make sure you get on your X's out there, if you have any X's on these, to get your names off of the titles to these things. So, but let's go through this. Based on how much money you make, it's going to give you two different options. One option, it'll give you 20% of the down payment. And then when you go to sell that house, whenever it is, you have to share 20% of the appreciation with this grant company. Okay, that's how it works. If your median income is 80% or less of your average area, you only have to share 15% of that. So confused? Don't be. Because let's go through here and just go through this. This might start coming around in more states. I don't know. It depends on how the California thing goes. But as you guys are joining us, please let me know where you're coming from, maybe what you do for a living. And if you're coming from California, this is right in the wheelhouse. But remember, I'm going to answer any questions that you guys do have. So you go through here and you say, okay, I'm a first-time home buyer. Yes, I am. I'm in California and I make an annual income. Well, out there, you're going to have to make about $150,000 just to be able to rent out there. You're going to pick your county that you're in. He already has these all pre-filtered. So I'm going to Fresno. Yes, I qualify. So it's going to tell me right here, did I qualify for the first-time home buyer? And is my income within the limits that I can get approved for this program? Both are yes. Okay, the details are. So I'm looking to buy let's say a $700,000 starter home out in California. The rate right now, let's go with the average rate is about 6. Let's go 6.5. This is going to change basically every day. So then you're going to go down through here and it says, okay, I'm going to need a $574,000 loan. My payment's going to be $36.28. You go down through here, and here's where you can elect. Here's how much of a down payment assistance you're going to get. $120. I got to put my glasses on because I'm an old guy. $126,000 is what you're going to get, and no payments need made. Well, that was bad English. Okay, so you're going to elect. Most people, if I'm in your case, I go all the way down here, and I'm going to put everything that I can get down as that down payment so I can avoid PMI. You're still going to need a little bit of money for closing costs, but if you're getting $140,000, if you saved any money, this is going to get you into the home. Okay, so that's how that works. So it's going to give you $140,000 assistance. You go down through here and say, okay, well, then what happens? Well, plug in here. Okay, the normal appreciation in homes throughout history is about 4 to 4.4%. Okay, so I'm going to put 4. All right, I'm going to be in this house. Let's just project out. I'm going to be there for 6 years, 5 years. Okay. So after 5 years at this annual appreciation, and I know what you guys are saying, house values are too high right now and everything else, but just go with it. Okay. Let's say, okay, you're going to stay in there. What do we always tell you? Stay in there for at least, 7, 8, 10 years. So we stay in there 8 years. At that point, that house now is worth $957,000. So how does all this come into play? Well, here's how it works. Appreciation breakdown. Your future home value was $957,000. We purchase price was $700,000, so we had $257,000 in appreciation. Okay, the Cal-HEFA program is going to take 20% of that appreciation, so $51,000. Plus, they're going to take their money back. So your appreciation piece of this is going to be $206,000. Okay, so when you sell this house, you're going to walk away with $206,000. So how does this really break down? Well, let's go back through over here. Well, basically, it's that. Well, this one doesn't have various options. He did make an initial calculator that went through a couple different options with you, but it was really confusing. So this is all you have to really realize. So you're going to have to pay back the Cal-HEFA loan, or $51,000. That's their part of the appreciation, plus the money that they gave you, $140,000. You're still going to be left with over $200,000. And think about it, guys. You didn't put any money down. You're using this money as a conduit to get you into a house. You don't have to make any payments on it. All you have to do is share on the appreciation at the time that appreciation takes place, and you sell the property. So that's how it works. That's it in a nutshell. We're going to go over it in great detail this evening. Let's see. Kyle just said, and he's the creator, founder of this thing. So I am not taking credit of this. Let's go down through. I didn't want to share everything because I want people to come back tonight. If we share all that, then okay, but let's go through it. So here, now, you will likely profit $212,000 when you sell the house, but there's going to be costs. So let's say when I sell the house, I'm going to pay a 4.5% commission. Years in the future, it was 8 years out. So let's go through. How does all this come down to the bottom line? Well, we sell the house for $957,000. We pay off the mortgage. The mortgage balance, if you do an amortization schedule, will be $496,000. We owe the Cal-HEFA program $140,000. That's how much they give us initially. We then have our share piece, which is $51,600. Then we have your closing costs and everything else to sell the house. This is your realtor fees and everything else. It's amazing when you look at it here, how much it costs you to just sell a house or buy a house, but that's that. And then your check, you're going to walk away from this one with $226,000. $226,000. Otherwise, you would have never been able to buy a house because you didn't have the money for the down payment. Okay, so that's that part of it. And then it goes through and gives you every county with the aggregate average median income, 80%, and all the other stuff, and gives you loan amounts and the whole ball of wax. So fantastic job. Kudos to Kyle for doing this. And he's going to explain more in detail of that this evening. So that is our show right now. So guys, I need you to ask any questions. If you don't have any questions, I'm going to conclude it right now, but I hope you guys start throwing up some questions on there. But I don't know. I hope you guys find value in that program, especially if you're in California, because it is daunting, to when you're out there and the housing prices are so expensive. So there are down payment assistance programs throughout the country. There's nothing like this. But if you don't need down payment, we always say, if you don't need down payment, that's probably the best way to do it, because you're not accountable for anybody when it comes to paybacks and things like that. You can normally get better rates because most of these programs come with a little bit higher rates. I'm not sure if this one's going to or not yet, because they still don't have the rates figured out just yet. So we're taking calls right now and consultation calls to get you prepped. And then on Monday, Tuesday, when the rates start to get issued and all the lenders are basically have this all set up, we'll be able to come back to you with more rates and so forth. So hopefully you guys found value in that. And but if you have any other questions, I would love to answer them right now. And I'll just talk a little bit more because this is lagged. So I usually watch on another computer. I'm watching what's going on. There's usually a lag time there. So if you do have any questions, let me know. But right now, like I said, in the markets, we're seeing the stability. And the stability is really good. There's no more hype about systemic risk but there's going to be. All the media channels need your attention because their ratings basically suck anyways. So they really need your attention. So what do? They come out with all these powwow and then smack you in the face data or marketing. and they just, spiel what they spiel. And half the time, if you fact check them, they're wrong anyways. So that's why I do this channel, because I think my tag word is going to be the banks are failing us. So I'm here to help. So that is it for today. It was a short one. You guys didn't have any questions. Fantastic. We do this on a daily basis. Some days there's a ton of questions. Other days there's none. But if you have a question specifically for me, what you can do, we got people coming in right now. But if you have a question specifically for me, all I need you to do is email me, and that's my email address right there. Or you can schedule a consultation, and that link is down below. So let's get over to any of the comments that you guys have. Please load them up, guys, because that's why I'm here. And if I don't know the answer, we'll try to look it up online, or I'll get back with you tomorrow to make sure I get that answer to you. So the first thing is we got here, when do you think we can start asking for seller credits in this housing market? Right now. I hate to say it, or I'm glad to say it. Probably every contract we have is getting some kind of seller credit on it, believe it or not. But we get most of our loans. I'm right outside of Chicago, but I hardly get any business in Chicago, believe it or not. Most of our programs our loans are in California, Texas, Florida, New York. New York's coming in quite a bit right now. New Jersey. Not the Carolinas for some reason. I think a lot of those states are going to open up soon as basically spring breaks. I'm not saying spring break, but spring comes into full effect. And usually May, June, July is when everybody and their mothers out there looking to buy a house. So right now we're seeing basically concessions on, I won't say 100%, but probably 75% of the contracts we're getting in do have some kind of closing cost concessions to it. So great question. The next question we have is, hey, Dan, my mom sold her condo and is looking to buy again. Are there any programs for second homes? So here, let me explain that this is a huge piece of the puzzle. I have a lot of realtor friends and a lot of new realtor friends and mortgage friends in this business. A lot of the people are new. So your mother sold her condo. She wants to buy again. It's not considered a second home. She's just buying another property. So this is where a lot of people, don't kind of get confused. It's like, okay, I can't get a first-time home buyer loan. So what can I do? You can just get a normal loan. Most of the first-time home buyer programs require, if you're a first-time home buyer, you can get away with 3% of a down payment. If you're a repeat buyer, use that 3% usually goes up to 5%. That's about it. You do get some price concessions once in a while when it comes to rate, but there's not a huge difference between that. Another piece that a lot of people don't understand is once you close on your home, you're not stuck on that with that rate forever. Okay, so I'm not going, hey, buy a house now because rates are coming down. I don't know what rates are going to do. All the markets are showing us that they should be coming down, and I was going to show you the futures market, and I'll try to show you that here in a minute if we got time. But I had another question the other day from a realtor saying I have buyers for some commercial properties that I have for sale. And those commercial properties one's a 3-unit building. It's a rental. And then the other one is a 4-unit building and it's all rented out. And I'm like, okay, so is there a storefront to it? Is there something else to it? And they're like, no, it's just 4 units that people live in. I'm like, that's not a commercial loan. You can actually treat that. You can do an FHA loan on that program if it was going to be owner occupied, and you can do it 3.5% down. But if you buy that property with conventional financing, you usually need 15 to 20% down. The more you put down, the better your rates are on there. So that's a fantastic question. But a lot of people don't realize, you can buy another house after you sell yours and it's still considered your primary home. So we only consider second homes if she owns a house currently and maybe she's buying one, she lives in New York and she's buying a property in Florida. That would be a second home. But if she's just buying her second home in the number of numericals, then she's all good. Please have her reach out to us. We'd love to help. Next question is, can she contact work directly with you? Yeah, she probably can. So here is my email address. I don't work with most people one-on-one directly, but if push comes to shove, I'm more than happy to do that. And I'm not trying to be rude, guys. I was watching MG, the mortgage guy, yesterday, and he had a great comment. And it's really hard for us to say this, but like today we have 3, 4, I think we have 5 closings today. So that means I would have had to talk to all 5 of those people all the time, plus all the new clients. I think we're averaging about 3 to 4 contracts a day coming in. So I just don't have the manpower. I just don't have, look, I'm gray. I'm old. So I try my best to at least contact people. But if you're wanting to talk with me directly, call the number. Let me see if I can find that number down below. I hate to say it. Well, I'm here too much. Okay, so if you call in this number, please don't call Allied First Bank directly. We have our own little pod out here of my team. So you can reach us at 844-775-5626, and that is loan, 844-775-LOAN. Be careful when you call that, because I think the Loan Depot or somebody like that is 774 5626. 5626 is loan. So we've had people call in and say, you know what, I talked to somebody with your place and they're rude and this, that. And I'm like, who is it? And they're like, oh, Susan. I don't have a Susan. So what phone number did you call? Your number. And then we backload it, and they called Loan Depot. So I'm not accountable for how bad they are. So that's that. All righty. Thank you. Let's get to, can she contact you directly? Let's see what that is. Thank you. You bet. You bet. So like I said, if you call the 844 number, I'm usually here, but I try my best. If you need to talk to me, love to talk to you. But if not, you're taken care of. I'm involved in almost every loan on the back end, believe it or not. So I can tell you what loans are closing today, the names of the people, and every loan has its little quirks. And I can tell you every quirk that we had on those loans. So let's go to the next question. Oh, people, let's see what we have here. People calculate to see if they were worth buying rates based on how long they are planning on staying in the property. If we can get some sellers credits to buy down without increasing price of home, people calculate to see if it's worth buying down rates based on how long they're planning on staying at the home. Okay, rates. So some people do buy down the rates, and there's some programs right now called the 3-2-1 buy down, the 2-1 buy down, and so forth. Those are only really useful if you're getting pretty substantial seller credits. We look at that. We look at permanent buy downs. The nice thing about the 2-1 buy down is to use that money to give yourself a reprieve for 2 years. And the nice thing is, if rates and when rates drop, you refinance, you get a credit back for that money that was unused. So that's why the buy downs are better in some cases than truly buying down the rate. And that time, in most of those cases, it really gets kind of expensive in some areas. If we can get some seller credits to buy down without increasing price, yes, that's the goal. So I understand your comment now. So yes, that is the perfect way to do it, because if you're doing it yourself, you really don't want to do the 2-1 buy down, because all you're doing is just preloading that interest up front. I never advise it to people that are just funding it with their own money. So great question. Thanks for tuning in. There's no reason to calculate how long it'll be worth getting, right? Yeah, I think I understand. So the 2-1 buy down is worth getting if you can get the seller to pay. But we can calculate that and give you your options versus the 2-1 buy down versus a buying down the rate for the longevity of the loan. So the mortgage advisor you talk to, and they usually come to me to do the analysis and so forth. We can help you make that decision if it's worthwhile. And then Kyle, what you got, buddy? Heading out. Don't forget to join the live stream tonight, everybody. Woohoo! So Kyle's even telling you there. So he does that. He's going to go over his baby here, which is that website that I just showed you. And if you guys don't have any further questions, there was all mortgage related questions, which is fantastic. I'm happy to do that. But if you guys want to ask about the Fed, interest rates, housing market, generalization questions, Bitcoin, how the bond market works, what's mark to market, anything like that, I'm here to use as basically your financial teacher. So we're going to call this Finance 101, because we're getting people right out of the gate and teaching them the right way without any bias at all. So that's the report for today, guys. If you would, please don't forget to subscribe to our channel. And every time we post a video, you'll get an alert. And don't forget to join us tonight, especially if you're in California, you know it, or you know anybody in California, spread the word, because there's only a limited amount of people that have access to this program that we were just talking about. And we are one of them. So I hope to see you tonight so we can discuss this even more. And if you want further help, all you need to do is click that button down below and schedule an appointment with us, and we'll see you then. So thanks for joining us, folks.